Since we've got no trades to look at today, I've got a bonus for you guys. 3 new trade setups. Stay tuned. Hi, this is Tim from TradingStrategyGuides.com. Don't miss the second installment of the Trading Education Series on Wednesday. Our topic, how do you trade and make money? Let me know in the comments if you have any questions or comments about last Wednesday's video. Yes, I'm going to show you not 1, not 2, but 3 new trade setups today. And later on, a dive into the archives for today's trading maxim. It's a brand new week. I hope everyone has a great one. Remember to click the subscribe button and hit that bell so you won't miss any of these great trade setups. Okay, let's take a look at the first one, the precious metal Palladium. I like this look on the daily Palladium chart here. This is a descending triangle consisting of a strong support level that's been tested a bunch of times here at 21.25 with a series of lower highs. The volume was pushing down until a few days ago when it spiked. Now it's pushing down again, and the volatility has been pushing down for the whole pattern. I use the average true range, or ATR, to measure the volatility, which shows the average length of the last 14 candles. I will only take a sell signal on a descending triangle pattern. And here's the trade plan. We're going to sell a daily candle close below the triangle. On the breaking candle, to enter a full-size position, we want to see the volume bar reach up to the volume average. If it doesn't quite reach the average, but does reach 75% of the average volume, I'll take a half-size position to reduce risk. You can calculate the percentage by dividing this volume number by this volume average, and you should get at least 0.75. If you don't get at least 0.75, I suggest you stand aside on the trade. The stop loss will be 1.5 times the ATR, and the first target will be 1 times the ATR. So let's say this breaks down to here. You get close right here. That will be your entry. You will use a market sell order right there. Then you'll take a look at the ATR. You'll multiply that by 1.5. You'll measure that distance above your entry for your stop loss. You'll measure 1 ATR below your entry for your first target. If after entering the trade we get a candle close back inside the triangle, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout of the triangle should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we will close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. These 2 rules are the very definition of cutting your losses and letting your winners run. Typically I do this using 2 positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade. And that's the setup today on Palladium. Now you guys know the trade management plan now, right? It'll be the same for all 3 of these setups, so I'll shorten my description a bit so I don't bore you guys too much. The next setup we'll look at is McDonald's Corporation, known affectionately here in the States as Mickey D's. This is a daily chart of McDonald's Corporation. This is a bear flag. A bear flag consists of an incoming downtrend like this one here, and then an ascending parallel price channel like this. A bear flag is a bearish consolidation, hence the name. And the price is attacking a strong resistance zone here at 188.75-ish. So it could turn right here somewhere. And the pattern is confirmed by a decline in the volume and the volatility down here. And here's the trade plan. We're going to sell a daily candle close below the bull flag. As before, we'll sell a full-size position if this volume bar reaches this volume average, and we'll sell a half-size position if we get at least 75% of the average. Again, the stop loss is 1.5 times the ATR, and the first target is 1 times the ATR. After we enter, if we get a close back inside the bear flag, we'll shut the trade down for a loss. When the first target is hit, we'll close half the position for profit and move the stop loss to break even on the second half. Then we'll follow the stops until the market takes us out. Again, I'm willing to risk 2% of my account on this trade. And that's the McDonald's Corporation trade setup for today. And now, trade number 3 on the Forex pair Euro-New Zealand dollar. This is a daily chart of the Euro-New Zealand dollar Forex pair. This is a bull flag. A bull flag, which is the opposite of a bear flag, consists of an incoming uptrend like this one here, and then a descending parallel price channel like this. A bull flag, like the name suggests, is a bullish consolidation. And again, I like to see the pattern confirmed by a decline in volume and volatility like we have right here. The trade plan for this one, we will buy a daily candle close above the bull flag. And once again, we want to see the volume bar reach up to the volume average for a full-size position, or a half-size position if we get at least 75% of the average. Once again, the stop loss is 1.5 times the ATR. The first target is 1 times the ATR. If after we enter the trade we get a candle close back inside the bull flag, we'll shut the trade down for a loss. When the first target is hit, we'll close half the position for profit and move the stop loss to break even on the second half. Then we'll follow stops until the market takes us out. As before, I'm willing to risk 2% of my account on this trade. And that is the Euro-New Zealand trade setup today. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And speaking of understanding your own mind, that's my intent for the trading maxims. The maxims help me control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today, a trip back in time for our maxim of the day. Tim's trading maxim number 3. Never bet the farm. You should never allow any one trade to make or break you. For those of you who may not be natural English speakers, the phrase never bet the farm means never go all in. Never bet your car payment or your house payment or your farm payment for that matter. That's what we call scared money. If you're afraid of losing the money you're using to trade, you will never allow the trade to progress properly. The only way you'll be a consistently successful trader is to manage your risk. That's the name of the game. There are no 100% sure trade setups. If someone tells you their strategy can't lose, they're either deluded or lying to you. Since you will occasionally lose a trade, and you may occasionally lose a string of trades, you want to keep your trade size small, and therefore keeping your per trade risk small. That will allow you to survive and eventually recover from a drawdown period. Trading is not a get-rich-quick scheme. Trading is a marathon, not a sprint. Remember our Palladium trade plan here. We're going to sell a daily candle close below the triangle or below 21.25. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR and your first target is 1 times the ATR. Next, remember our McDonald's Corporation trade plan. We're going to sell a daily candle close below the bear flag. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And lastly, remember our Euro-New Zealand dollar trade plan here. We're going to buy a daily candle close above the bull flag. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. Be sure to sign up for my free Trading Picks email list to be sure you don't miss any of these great picks. I send out about 2 or 3 trading picks a week from all different markets, and you'll get to see them first. And the best thing is, it's free. I'll put the link below this video. And be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments, in a training video, or both. And remember, the only stupid question is the unasked one. And please don't forget to let me know what you think about the Trading Education series in the comments below. As always, thanks for watching. Thanks for subscribing. Don't forget to hit the thumbs up below. Have a great week, and I will see you on Wednesday.